Thanks for joining us at xm.com for this Forex Preview video. We'll be having a look at the RBA policy meeting coming up this week. I'm Cristina Marujos, and joining me today is Cristina Parthenidu, investment analyst. The Reserve Bank of Australia meets early on Tuesday, Cristina, and given the RBNZ's boost in rate expectations last week, investors are questioning whether the RBA could also act in the same way. Do you think a similar reaction is possible at this meeting?
Hi, Christina. Well, I think it will be harder for the RBA to sound as hawkish as the RBNZ was last week. Both Australia and New Zealand have very strict restrictions for international travelers. Moreover, the winter season has already started in those countries, and COVID could be a threat given that the share of vaccinated population is still very low, so citizens could be more vulnerable to infections in the next months. Unlike New Zealand, however, Australia has a bigger unemployment rate, and the central bank's inflation rate target is also higher at between 2 to 3%. Moreover, according to the RBA, wage growth should sustainably rise above 3% for inflation to reach the target, which currently this is not the case yet. So basically, on the economic front, there is little incentive for policy changes at the moment, although the muted infection cases since last year have allowed the economy to recoup some of its pandemic losses and boost its GDP growth earlier than other key economies, especially in the second half of 2020. Of course, the booming housing market and the fast pace in mortgages calls for more monetary tightening, and we can't exclude some hawkish comments from the bank, but the labor market seems to be the priority for now, and this is something evident in the US as well. So I don't think that the RBA will announce any policy changes. Besides, the RBNZ didn't use any hawkish words. Instead, it showed through a chart a rate hike earlier than analysts expected, but as far as I remember, the RBA doesn't use any charts in the rate statement, so perhaps it will be difficult for the bank to use the same method as the RBNZ. About tapering now, the bank was very clear that it will review its yield curve control policy and quantitative easing program at the July's meeting, so we may not get any new information on this front either. And if that's the case, then I think the Australian dollar will probably remain unchanged for now.
And speaking of the Australian dollar, apart from the RBA, this week will provide us with some economic data as well. GDP figures for Q1 on Wednesday and retail sales on Thursday. How do you think the Aussie will perform?
Well, the data may not have a great impact on the Aussie either, although the annual GDP growth figure is expected to extend recovery to the positive area. Some weakness cannot be ruled out either in the quarterly GDP growth measures, and the monthly retail sales could also slow pace because of the floods and some snap lockdowns during the period. Nevertheless, the data impact on the day of release may not be sharp enough to break the range trading in Aussie dollar. The RBA will probably make some reference on them the previous day and use them to prepare the ground for the next meeting in July. So in this case, if the bank appears more optimistic about the economy and the data, then we may see some movements in the currency during the policy meeting on Tuesday and not on Wednesday or Thursday. But generally, I don't think that the policy meeting or the data releases can push the Aussie out of the range this week. Probably US jobs data at the end of the week could produce some volatility, but let's see what will happen.
Cristina, thank you for joining me today. This was a Forex preview on the RBA policy meeting coming up this week. Thanks for watching at xm.com.